Scott Bauer joining us. He's the CEO of Prosper Trading Academy. He's joining us to talk currency. Scott, good to have you with us this morning. We've got the Fed, a big day ahead of us tomorrow. The meeting begins today. Let's begin with Jerome Powell and expectations that he's going to leave rates unchanged. What should we be dialed in on, though, in terms of his rhetoric, Scott?
I think it's all going to be about tariffs and what he says, how that may impact 2020 and beyond. They are definitely going to leave rates unchanged, and it's all going to be about, what's going to happen in the first quarter of next year. What does the dot plot tell them? What do all the metrics tell them? And I don't think we're going to see anything out of the ordinary here. I wouldn't expect anything other than what we've seen continuing over the last 3 to 4 weeks here, and that is, we're gonna take the economic numbers as we get them. We'll see what the economy is doing, and we'll just kind of play it, on the fly here with no expectation whatsoever.
Scott, how much focus are you giving this number that just came out? I'm actually looking, the dollar limited, mostly holding that 97.50 level. But if you take a look at the treasuries, they're actually on the move. I just noticed that we have bonds which spiked lower. Again, limited in terms of follow through, still holding up above yesterday's lows. But what are you looking at here in terms of this release?
So it's really interesting, Ben, because these numbers that came out today, I think are typically given like a B- or a C
not
in
that
terms of their importance.
Right.
However, the unit labor cost is when you dive into it, it's really a leading indicator of consumer inflation. And non-farm payrolls are linked to inflation as well. And so, these are weaker numbers, and I think this just tells us and probably just gives a little bit more added fuel to the fire for the Fed that they don't need to do anything. Inflation is squarely in check, and there's nothing showing at the signs right now that the economy is really heating up.
Scott, with inflation that's squarely in check and a Fed that's focused on tariffs, what does this mean for the U.S. dollar moving forward into the end of December and as we embark on 2020?
It's protective. It's the dollar and the yuan are really, the risk haven, the safe haven currencies out there. And I think we're going to see a very steady dollar. I don't think we're going to see much change. If anything, maybe a bit of a bias to the upside as we get closer to December 15th and what's going to happen with the next round of tariffs here. But I think that squarely the dollar is in a very firm place. I can't really see it backing off much from here.
Scott, you mentioned December 15th, the tariffs. I've got my eye on the calendar. December 12th is a date that I've got circled with a big red marker. UK elections. Polls are suggesting the Tories will be victorious, but that's just the beginning of it in terms of where the real work begins. We still need to reach a deal. I guess I'm wondering if the elections are going to be productive or just another distraction at this point.
This may be the one that actually changes, Ben.
Okay.
We've talked for so long how this has just gotten extended and pushed down the road. This may be the one that actually shows the light at the end of the tunnel with some finality here. So, yeah, it's going to be real interesting to see what happens. The pound is really holding up. It's still trading towards those highs around 131 or so. It's going to be real interesting to watch, but I think this really could open up kind of the gates here to some sort of finality.
Yeah, I guess, Scott, you're probably not the only one thinking that this could be the one, as we've seen the pound, as you mentioned, back up to within ticks of that 132 handle. A lot of focus on central bank activity with the Fed this week, with the ECB soon to come. But let's talk about next week. We've got the Bank of Japan, you've got the Bank of England next week. We were just talking about the UK and some of the optimism associated with this election, but I'd imagine as they wait for some of the dust to settle that they're going to be forced to remain steady as well.
Exactly. They can't afford to ruffle the feathers here, if you will. There's just too much at stake with Brexit. So, coming out of the UK next week, again, much like I think we're going to see tomorrow with Powell, is they're not going to say too much. They're not going to change course at all.
All right, Scott, we've got a lot to watch here today in terms of currencies, in terms of the yen, some of the other majors here that we didn't even cover. There's so much focus on the others. We'll continue to watch the dollar, the British pound, the euro currency, eco data, and the elections with the Fed. A lot going on here, Scott. Really appreciate you joining us here for a look at the dollar and foreign currencies and that number, that 8:30 a.m. Eastern number. Traders, at Scott Bauer. He's the CEO of Prosper Trading Academy.